Moore with Global View. Hi, it's Ken Moore from Global View Investment Advisors. Today I'm going to share a little information I'm sharing with clients about the coronavirus and what I'm going to turn the camera off and focus on what I have prepared for you. So the main thing I want to talk about today is that this is a very serious situation and one where if we practice the right amount of social distancing, we can flatten the curve and cause this thing to be substantially less worse than it would be if we don't pay attention to it and give it proper attention. As you can see here on the chart, there are two pictures. One of is Prince Charles, I think, or anyways, in England, he's meeting dignitaries, and instead of shaking hands and hugging, he's doing a namaste. He's just giving a symbol. He could bow, he could salute, whatever he wants to do, but he's not touching. In contrast to George W. Bush a few years ago, getting a kiss from, I think it's the Italian Prime Minister. So we don't want to do that. We want to practice social distancing. I'm going to talk about that a little bit later. This is a serious and real threat. This is not just the flu. If the estimates are right, it might be 7 times more deadly than the flu. Hopefully, if we can contain it, it doesn't get as wide, but that can be a problem if we don't take it seriously. So we need to be smart. We need to help it contain it. We don't need to panic. We don't all need to have 3 months of toilet paper from Walmart or Costco. We need to practice social distancing. What that means is that we should try, where possible, to stay about 6 feet away from other people in public. We should, if we can possibly do so, cover our mouths with a mask or something else. We should have gloves on if we're in public, if possible. If not, we should use alcohol wipes. Let's just do everything we can to prevent its transmission. Driven bear market or depressionary based from the economy, we would expect it to resolve much more quickly than previous bear markets. Just as it went down quickly, it can go up very quickly. No one knows exactly how far it's going to go down, and we don't know how fast it's going to come back, but it could happen very, very quickly. While it's resolving, it could still drop more. Many pundits see minus 30% as the downside. Who knows for sure? Depends on many things, but there are a lot of indications that that's a pretty good number. Values irrelevant to short-term market moves. It just happens. At the same time, we had the issue with oil prices, this oil price war between Saudi Arabia and Russia. If we find it prudent to make changes with managers, we will. We know how to do this. We've set some criteria. We want to make sure that every manager is following that criteria and meeting expectations. Remember, it's not about how much does it fall in the short term necessarily. It's about how well do we expect it to respond over a 3-year period. So this is no time to be selling, especially if you're still saving or have cash on the sidelines, or if you have a small withdrawal rate. Otherwise, you should have a pretty good emergency fund. We should have some bond funds for your retirement spending portfolio or something similar. It might be an excellent time to invest. We're in the early stages of this thing. Good analogy is Hubei, China in early January. There were less than 100 new cases per day. Yesterday we had 63 in the US. So 3 in China. In the 60s in terms of new cases in the US right now, which in less than 2,000 overall. But remember, for every person infected, 2 or more others can be infected. So it's not just about you. It's about other people. It's about you protecting this thing from going wild. The window of opportunity is now to diminish the impact. Again, we want to practice social distancing. We want to stay out of crowds where possible. We want to avoid restaurants and bars and so on, at least for the next few weeks, if possible. We want to exercise excellent hand hygiene. That means washing your hands, happy birthday twice. If possible, wear something over your mouth like a mask. And yes, it does help. We want to wear gloves or use alcohol wipes if we're touching something that's suspect. I even recommend maybe wiping your mailbox down. Think about the mailman's touching everyone's mail. So if somebody has it, they can bring it to you. This is where we are on the infection curve. This is kind of a conceptual map made by JP Morgan that shows where the US is early. We're still in the early acceleration phase. And you can see, for example, that Spain, Iran, and Italy are in the late accumulation. They're really growing. South Korea may be closer now to a peak. They're doing a pretty good job, it looks like. China's on the decline. They're having fewer new cases a day substantially than we are when they were peaking above 2,500 or 3,000. So I'm going to talk about that a little more. For reference, this shows a timeline from an article I found that was referenced by Ben Thompson at stratechery.com. We're in a period where we have 100 or so, less than 100 new cases. And in Hubei, China, there was about that number in early January. But they didn't really take it seriously. They closed fish or something. Didn't really take it seriously. They'll one another and do all these things. They didn't take it seriously. So by later, the third week or so of January, the number of cases started to get above 2,000, 2,500 a day, 2,500 cases a day. So they locked down. The World Health Organization declared a public health emergency. There was also the Lunar New Year national holiday, and they extended that. They made it a national mandatory extension. And as you can see, and it's important, the number of cases, and you see where the true new cases immediately plummet in gray, those really started to fall. That's the case of, that's something being contained. That's what we want. We don't want this to go like this chart shows, that if we don't take the right protective measures, if we do the things that are being prescribed, we don't travel, we don't fly around, we don't meet people that we don't know, we don't shake their hands, we don't touch, we practice good hand hygiene, then what can happen over the next 3 weeks, if we do this right, we can free up hospital beds, we can reduce the cases of deaths up to 67 times. Now, this is not just about reducing the incidence of cases and deaths, which it is about, which we could decrease that 67 times according to virologists. That's a lot of people. It's about making sure that our healthcare system can handle it. So when it does ramp up, if it comes to town, if it comes to where you are, then you don't want the hospitals to be full, because we only have about 3 hospital beds for every 1,000 people in the United States. Fortunately, we have a lot of ICU units, but not that many hospital beds. So there might have to be some contingency if we don't take the right measures now. That's why it's so serious. And I think that's why the markets reacted so negatively. So this is data from the worldometer.com, which tracks the daily number of cases, many things, including the coronavirus. And there were, actually, this is a couple days old. They're closer now to 2,000 cases. There were 60 some new yesterday. Again, we're at a similar point as China at the beginning of the year. And as you can see, China now has a very low number of new cases, whereas it's really growing exponentially in Iran and Spain and Germany. And we hopefully can escape some of that exponential growth, but we can expect more of it too. Hopefully we don't get the deaths out of control. And you can see that in China, There have only been 3,200 deaths. Swine flu in the US had 12,000 deaths, just to put this in perspective. Again, after lockdown, the cases in Hubei fell in half in 2 weeks after they took emergency measures. So according to Ben Thompson's blog at stratechery.com, the rapid spread of coronavirus around the world could have been substantially curtailed if the broad swath of measures China brought into control were introduced just a few weeks earlier. So they suggest that China had 114,000 cases in February. It could have been 67 times higher without interventions like early detection, isolation of the infected, and travel restrictions. If they'd been brought even a week earlier, 66% fewer people would have been infected. That would have brought the number of cases down by 95%, saving thousands of lives. So this chart shows the number of daily new cases, and from there in January 22nd to February 11th, 13th, that's where you see the growing cases in China. You can see from the chart that there's one anomaly or a couple of days, but the trend was down from early February after they locked down. Unfortunately, it got out. You know, it got to Iran, it got to Italy, it got to Europe, and it made it to the US. So by late February, it started to ramp up around the world, and that's where we're seeing the drastic market reaction, and probably overreaction, at least in the long term. So there's a window of opportunity to diminish this impact. If we practice social distancing, the 2-meter distance, covering your mouth, covering your gloves, coughing into your, ideally, your lapel or your shirt, but certainly your elbow and not your hand, wearing a mask and gloves to avoid contact, not touching your face, wash hands, 2 happy birthdays. You can get this, it's cdc.gov website. They have prescriptions and you should follow those. If you're elderly especially, if you have something called a comorbidity, if you suffer from diabetes or heart disease or another immune deficiency, you should especially avoid contact with others. And if you're over 70 and certainly over 80, you're much more likely to suffer from this disease than a 20-year-old. And it looks like, and this is good on one hand, bad on another, if you're under 10, you really don't get it, or at least no one sees that you get it. You might have it, and it might not have any impact. So those little kids running around are the most dangerous thing in the world because they're incubators. They potentially have the virus and they're spreading it everywhere, but you can't tell. So you want to reduce this viral load, just like you want to reduce not being in a room with somebody who's an incubator or not showing symptoms but has the virus, and there are a lot of those right now probably. You want to avoid that, and you certainly want to avoid the high viral load. That's someone who's really sick and they sneeze in your face, for example. You're getting a high dose of the virus from someone with it, and that's gonna give you the virus, and it could be bad. So again, we want to practice social distancing. There's a new handshake in town. It's the namaste and not the hug and kiss. So what is the economy going to look like? And this is Bloomberg Economics forecast that we're likely to get something 1 to 2% GDP reduction in the U.S. It depends on what that really means and how long it lasts. But there are various different forecasts. We could go into recession for the first half of this year. It's quite possible. The oil price shock, the extended closure of events, sporting events, schools being closed, all these different things. The travel that's lost, the restaurant revenue that's lost, the venue revenue that's lost won't ever be replaced. No, but there will be some savings as a result. I would expect, and I'm going to talk about this a little later, a very strong fiscal discipline. And there'll be politicking around between Democrats and Republicans what's the right way to do it. The thing is, we need to do it. So as you can see, if it does that, it should go down something and come back out of it. Now, I would expect this to be a little more extended than that. It'd be a little more U-shaped possibly than V-shaped. If it is even the first blink of looking like it's less terrible than we currently think it is, means the market responds quite. The market has devastated in a lot of stocks, even some high-tech stocks have been devastated. So I expect the market will react much more quickly than the economy upward. As you can see, we've had bear markets, and this is since the 1800s. The average bear market since the 1800s includes the Great Depression and a lot of data. This is Goldman Sachs research. We've seen can go down 30-some% on the average decline. For structural declines, those which were associated with the recession or a world war or something like that, it's extended and the economies are devastated. There's destruction of productive capacity. Those are the deepest. Cyclical bear markets are those which happen quite frequently, and those are the second most shallow. The most shallow of all typically is an event-driven bear market. And as you can see by the next chart, the average length of the event-driven bear market is substantially lower in months than all of the other ones. And that length is somewhere in the 8 months range that bear market can last. And then the time to recover for event-driven bear markets is substantially faster, also within that a year type time period at least. And we should expect fiscal policy to provide a tailwind towards the mid-year, sometime in Q2, definitely the third quarter of this year, according to Congressional Budget Office data and Goldman Sachs research. So similarly, healthcare incident bear markets, typically you see a drawdown of somewhere, in that it's rare that you see a plus 12%. That was the MERS in South Korea. The median was somewhere, the max drawdown across all pandemics, and coronavirus is now a global pandemic, was somewhere in the minus 12% range. Well, we've gone past that. I think yesterday we were in the 25 or 30% range for various indexes. During the last periods of economic distress, which this could be, we've seen fiscal policy step up, and we've seen a payroll tax cut, and that's being proposed by the president right now. Income tax cut, harder in the current political climate. Tax rebates, bonus depreciation, other measures, other accounting measures to help businesses. Extended duration of unemployment, extra payments to Social Security, safety net payments, fiscal transfers to states, and infrastructure spending. Those are all the things we got in 2008. And I would expect to see some of these bullets unleashed as well, and even in the coming days. So as you can see, during other epidemics, 6 months later and 12 months later, the markets were generally back positive after 6 months. And after 12 months, they almost always were, with the exception of HIV/AIDS, which took quite a long time to get under control, and now it's being managed like a chronic disease. Thank God for those people afflicted with that terrible disease. So as you can see here, well, there are a lot of new cases. So with new cases, we're seeing the number of new recoveries not happen as much because they're in different places. So again, we're earlier in the stage there. You have the new cases, the more fatal cases occur the most quickly. And then there are a lot of other people who have this virus that no one knows who have it, who are having symptoms that are being called the cold and so on and not being tested. But the FDA is working on that, and there were a Roche-approved The FDA approved a Roche test yesterday that's going to be made available. I think there's something like 12 million test kits going to be available in short order. So this is a serious and real crisis. It's coming. We need to be smart, help contain it, not to panic. We want to practice social distancing. Because this is an event-driven bear market, we should expect it to resolve much more quickly than other previous bears. While it is resolving, it could still drop more. Value is irrelevant to short-term market moves. If we find it prudent to make change with managers, we will, or our stock strategy, and I monitor it daily, according to established criteria that we've set already. For example, I have a screen on the portfolio that I run that I look at daily. This is no time to be selling, especially if you're still saving or have cash on the sidelines. It might be a good time to invest. I think that 3 years from now, for sure, we'll feel like it was. So this is our team, and happy to help you today. I hope this is helpful to somebody. Thank you for your time.